Hello, Dana Sparks, broker of Maximum One Greater Atlanta Realtors. And this week's contract tip has to do with the appraisal contingency on an FHA insured loan and a VA insured loan. This is an oldie but a goodie, yet bears repeating. So, a buyer who is getting a loan from a lender that is insured by the FHA or by the VA has appraisal protection rights through day of closing, through the last contractual day of closing. And just to show you where that is so that you can show your clients, would the need be, on the GAR form, so on the GAR form, you're going to fill out the contract, and then if the borrower is getting a loan insured by the FHA, you have to include the FHA Loan Contingency Exhibit. And on that exhibit, under paragraph 10, the amendatory clause, it specifically states, it is expressly agreed that notwithstanding any other provision of this agreement, the buyer shall not be obligated to complete the purchase of the property described herein or to incur any penalty by forfeiture of earnest money deposits or otherwise, unless buyer has been given in accordance with HUD and the FHA requirements in a written statement by the Federal Housing Commissioner or a direct endorsement letter setting forth the appraised value of the property of not less than blank dollars. So you fill in that blank for the price that the property must appraise for. If the FHA appraiser comes back and the property does not appraise for that price, the buyer may terminate. You will see there is no fill in the blank for a date in the amendatory clause paragraph. That means that provision covers or protects the buyer through the last date that the parties are in contract, which would be the last day of closing as agreed upon in the initial contract and has been amended throughout various amendments. Also, further on in the exhibit, it does say that this exhibit supersedes anything that comes prior to or after. The government loans trump everything in our privately written purchase and sale agreements. Now, on paragraph 5 of the FHA loan contingency, that's where you fill in the blank for the number of days for the actual contingency for the financing part of it. So that says, buyer shall have blank number of days from the binding agreement date, financing contingency period, to determine if the buyer has the ability to obtain the loan herein described. That means the buyer has so many days from the binding agreement date, and those number of days are negotiated between the buyer and the seller, to find out if they have the ability to actually get the loan. It has nothing to do with the property. So appraisal contingency has to do with the value of the property as collateral for the loan. The financing contingency is the borrower a strong enough risk, so to speak, for the lender to finance them the money. Now that has a time frame, but the appraisal contingency does not. So a buyer may terminate prior to closing and get their earnest money back or not be sued. However, a buyer, if you get a low appraisal, you must actually send the termination prior to closing. You cannot just let it fail to close without giving any notice to the seller why you're not closing, or then the buyer will be in default. So that's where it is on the GAR, the GAR FHA loan contingency exhibit. On the VA loan contingency exhibit in the GAR contract, it is the same thing. The financing contingency paragraph is also on the front page in paragraph 5. And then on the VA loan contingency exhibit, GAR FHA loan is document is F63, VA is F65, and again it has a mandatory clause, paragraph 10. It is expressly agreed, notwithstanding any provision to this agreement, the buyer shall not incur any penalty by forfeiture of earnest money deposits or otherwise be obligated to complete the purchase of the property described herein. If the agreement purchase price cost exceeds the reasonable value of the property as established by the VA. So in the VA loan exhibit, it doesn't even have a fill in the blank for an amount. It is just the VA gets to determine reasonable value of the property. And if a buyer is getting an FHA or a VA insured loan, they can just terminate with that low appraisal. On the GAR contract, if a buyer's getting a conventional loan and the appraisal comes in low, the buyer has got to give the seller the opportunity to sell it for lower. But on VA and FHA, the buyer can just walk away. Now, in the RE forms contract, same thing. On the FHA loan exhibit, it is the very first paragraph, and it says, this is the RE200, the RE forms FHA exhibit. It is expressly agreed that notwithstanding any other provision to the contract, the buyer shall not be obligated to complete the purchase of the property described herein or incur any penalty by forfeiture of earnest money deposits or otherwise, unless the buyer has been given, in accordance with HUD FHA requirements, a written statement issued by the Federal Housing Commissioner or a direct endorsement lender setting forth the appraised value of the property not less than blank. And you fill in the blank for the dollar amount. And in the RE forms VA loan contingency exhibit, which is RE201, it states the same thing as it does in the GAR form. On the first paragraph, it is expressly agreed that notwithstanding any provision to the contrary, the buyer shall not incur any penalty by forfeiture of earnest money or otherwise be obligated to complete the purchase of the property if the contract price exceeds reasonable value as determined by the VA. And also in the RE forms contracts, it specifically states that this exhibit, meaning the VA exhibit and the FHA exhibit, shall control over any conflicting language in the above reference contract and any exhibits or addenda attached hereto. So now, one caveat in the RE forms contract, if you go binding under an RE forms contract, there is again a time frame for the actual financing contingency part of it, and that is found in the actual purchase and sale agreement. The financing contingency time frame, not the appraisal contingency, but the financing contingency time frame on the RE forms is in the purchase and sale, not in the FHA and VA loan exhibit. So again, just a reminder on those borrowers borrowing money that is insured by the FHA and VA. If the property does not appraise for the contract price, buyer may terminate through day of closing, get their earnest money back, but you buyer's agents, the buyer must send notice of termination prior to that last day of that the parties are in contract, which would be the last contractual closing date. Thank you so much for watching. Again, Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.